Welcome back, friends. So, we've seen a rather lackluster day on Wall Street today. Uh, on the back of fantastic results from Nvidia, we saw a very sharp rise in the US markets on Thursday, but there has been no great follow up buying thereafter. Neither Friday nor today, Monday, has been great for the US markets. They continue to be lackluster, not much of follow up buying. Whereas there is still some steam left in the rally, I believe that the market expectations are too high that the US economy will see a soft landing. Whereas one cannot rule out the possibility of a mild recession setting in later on the back of continued rise in interest rates. High interest rates along with a recession could hit many areas such as commercial real estate and also regional banks. This need not create a systemic risk and could be idiosyncratic to a few regional banks. However, the headline news will definitely impact the US stock markets and also the world financial markets. Markets will need to reprice its expectations of a soft landing. Already we were pricing in 6 interest rate cuts beginning March, and that have been reduced to 3 beginning June or July. Now, this kind of a repricing, if it continues any further, could have deleterious impacts on the US stock markets and therefore also on the world financial markets. One also needs to take account of the fact that the Federal Reserve has yet to start rolling off its bond holdings, the process which is known as QT. While the central bank is expected to start the tapering soon, yet this is another factor that is prominent in the tight monetary policy of the US Fed. Quantitative tightening is yet not taken off in the manner that is envisaged. And there is a lot of easy money that came in from the COVID era that is still lying around and which is still yet to roll over and cause its true effects on the economy. It normally takes 2.5 years for the effects of an easy monetary policy to percolate throughout the system. We have seen a good amount of printing of money which took place in the COVID era, and even after the administration was taken over by Joe Biden and his team. So, as I've explained, high interest rates for longer are probably here to stay with their consequent effects on the economy and the stock markets. Real estate problem, although is idiosyncratic to some banks who have an asset liability mismatch, yet headline news always creates problems with a market which is full of high expectations. This on the top of a very narrow market breadth which is based majorly on the back of a sharp rise in the Magnificent Seven, could have sudden and severe impacts on global stock markets when the first impact starts getting seen. If there is any chance that the market has to be forced to start pricing in rate cuts beyond June or July, that will definitely cause an immediate spin-off in the world financial markets, and the spiral could start. I believe the time is not very far off when you may start seeing bubble-like conditions appear even in AI stocks, artificial intelligence, the chip stocks, and a severe downturn over there in terms of lowering of growth expectations can start having its ripple effect in other sectors and ecosystems as well. Yet, a little more steam can be enjoyed. However, over the next couple of days, the market will remain lackluster and a little negative to add to the tint. To get to know more where we are headed from here, friends, do join our Prime or Prime Plus Telegram programs, which gives you an accurate reading of the markets over the next few days, weeks and months. And you can do that by WhatsApping us on 982-086-1044. You can alternatively also email us at globalmoneyinvestor@gmail.com. It's globalmoneyinvestor@gmail.com. Do not forget the fact that any attempts at comparison of the AI boom and the NVIDIA blockbuster results to the Cisco era during the dot-com boom is being accompanied by this time is different. The AI boom is here to stay. Well, even during the dot-com boom era, the boom and the bust, so I would like to call it, there was expectations of a similar kind. Yes, the computer boom and the internet boom was there to stay. But growth began to taper off a little bit, and you saw the consequent impact on Cisco stock prices and other internet companies, and what came to be known famously as the dot-com bust. Similar scenario could unfurl itself in the AI era. There is tremendous amount of excitement for the weight loss, obesity drugs, and also for the artificial intelligence and the ecosystem that is getting built around it. Some of it is here to stay, and a good amount of it, I would say, is here to stay. Yet, the expectations, I believe, are much further than what the reality will turn out to be. And if you all want to know by when the first signs will begin to appear, you have to wait not very long, friends. So, I wish you all very good week ahead, investing week ahead, and do try and join any of our Telegram programs, Prime or Prime Plus, to get more detailed and scientific predictions of where the markets, the US markets, and also the global stock markets are headed from here. Happy investing, take care, and have a great investing week ahead. Take care. Bye-bye.